Hello and welcome to Stock and Roll, the podcast where we deep dive into the world of equity compensation. Today we're exploring Sweden, a market with unique regulations and evolving compensation trends. I'm excited to have Stefan Sundell, a seasoned expert in global equity program, with us. Together we'll tackle the challenges of Swedish incentive plans, including shareholder approval, ESG considerations, and tax pitfalls. Whether you're a startup, a multinational, or simply curious about Swedish equity, this episode is packed with practical insights. Let's dive in. Okay, then we're here for another podcast. This time we have Stefan with us. I'll let you introduce yourself. I remember I met you 5 years ago or so when we were in the absolute start of Optio. You were in Nordea, and I think since then, for us, you've always been like the number one person with the competence in Sweden. So we're super happy to have you here, and looking forward to deep dive into a very Swedish specific topic today. But first of all, why don't you introduce yourself to the listeners?
Thank you, Christoffer. Thank you for inviting me. I've been around for quite a time in the Swedish market. I joined an audit firm in the 90s called Arthur Andersen, a US-Norwegian company. And as part of my work there, I worked with the first private equity firms in Sweden and their fund valuation and option schemes and so on. And from there, I moved to the financial markets, joining an investment bank called R Securities, that were one of the leading advisors in incentive schemes among the listed companies, especially among the Wallenberg sphere companies. And that investment bank formed part of Nordea, and from the last, I would say, 25 years, a both part has been within the Nordea framework, where I was responsible on a Nordic level for advising and coordinating administration and hedging solutions for equity-based incentive schemes. Since 2 years, I'm running my own business. It's mainly based on the client base that I had on Nordea. That gave me an opportunity to continue my business on my own. And on an accumulative basis, I think I'm getting close to 1,000 incentive plans that I've been involved with. And I'm currently advising around 60 listed Swedish companies, but also have experience around the Nordics, from Iceland to Faroe Islands and Denmark, Norway, and Finland.
When you say advising, is it more is it often when there's new programs, or do you typically come in during kind of during the period that the program is live, or what's kind of the ratio?
Yeah, advising, from my perspective, I've always tried to become perceived as a trusted advisor, meaning that my client engagement are for long term, meaning that I start off with normally with an initial discussion regarding alternative setups and designs. I always try to keep the best interest of my clients, of course, and based on the discussion, we start drafting alternative plan structures. And that also include in a certain stage in the project to of course address the administrative issues, hedging issues, but also have a perspective from the shareholders of the company. And then, as you know, all plans in Sweden need to be approved at the general meeting, most commonly on the annual general meeting, but it's sometimes also an extraordinary general meeting. And from there, we make a launch, and hopefully the plan is well received by the participant, by the board and the shareholders. So the plan will, to very commonly be renewed on an annual basis.
Yeah.
And that means that I continue advising the company, not to the same extent, the second and third year, but I tend to have a long-term relationship with my clients.
Yeah. Oh, very, very exciting.
Yeah.
And of course, then today's topic is deep diving a bit into Sweden, and kind of a bit of an overview of how equity programs are structured, how they work. And then we'll try to catch a bit like all the high level elements here. That's easier said than done, but basically what to keep in mind when you're designing and running a program in Sweden. So if you could start off with a high level overview, and we can rather deep dive a bit later.
Yeah. I think the first incentive plan in Sweden actually came in the late 80s. Stock market was booming. Some companies launched convertible plans for employees. Some were good, some were not, because there came quite a substantial crash in the early 90s. But anyhow, in the late 90s, and the more international plan linked to employment started to emerge. Stock option plans, similar to those in the US. And those two plan types, tailor-made securities that was evolved in the 80s, 90s, continue to have a substantial part of the Swedish market due to the fact that capital gains tax is only around 30% in Sweden, while the other plans linked to employment have a full modular tax impact with around 50%, sometimes more. And it also triggers social security costs around 31% on top of that. So during the time, we have seen two parallel structures living side by side in Sweden, while in the larger group of large caps, we have seen quite swiftly after the millennium shift a transfer to share plans or performance share plans, share matching plans, where while the smaller companies and mid caps have to some extent kept the tailor-made securities plan over time, even though we of course have seen more and more companies in the mid and small caps adapting a similar thinking about the plan structure and introducing share plans as well. One important element when designing the plan is, of course, to have a shareholder approval. And that is quite unique in Sweden, that we have a 90% approval level when transferring shares or other securities from the company to the participants. Yeah. So unless you have a third-party involvement in the transfer mechanism, you trigger a quite significant approval level at AGM, meaning that you really need to design a plan that can be accepted at the AGM or the general meeting, and therefore it takes some work to find out what to do.
Question on that: is it often that you see it's not accepted or approved? So is that like commonly?
Yeah, I would say it. Of course, both on the advisor side and the board have experience, have gained experience from the dialogues with the shareholders. And the Swedish institutional shareholders already in 2003 started to issue policies or guidelines on their view.
Yeah.
So I think that from the Swedish shareholders' perspective, they're not that common that you see companies say no. It's still common. But from an international shareholders' perspective, you see an involvement from the ISS, Institutional Shareholders Services Governance agencies, that say no, and that happens to Ericsson, Electrolux, and a few others over time. Yeah. So it's not uncommon, but it's I guess you will see it maybe 4 or 5 times a year.
To put you a bit on the spot there, if you're saying like 3 advices that you need to do in order to avoid getting a no at the AGM due to the proxy or any of the others, what would those 1, 2, 3 tips be?
Yeah, first of all, you need to get an understanding. Not all shareholders are present in the general meeting, so you need to get an understanding whether the foreign shareholders would obtain the 10% level or not. And if you do that, if they do that, you need to seek some kind of discussion and get an understanding of their guidelines. And if you don't feel comfortable about the getting the approval, you need to make sure that you have alternative hedging solutions, meaning that you can make a third-party delivery mechanism through a share swap. And that backup solution has become very, very common since, I would say, I introduced it for Nordea in 2006 and 2007.
Yeah.
And since then, it's become very common.
Oh, interesting. And I think like the way we see this is that in many other jurisdictions, the AGM and the approval is more like a formality. So you don't really think so much about it. Obviously, you anchor it with the key shareholders and there are board meetings and remuneration committee meetings and so. But like in Sweden, what we've seen as well is that like this is a much higher focus just due to this. It's not 75%, it's not over 50%, it's actually 90%. And that is a big difference, actually. So I think that's a very, very good point. I also wanted to ask one more, or not a question, but like a remark. What you mentioned about the social security rate, 31+%.
Yeah.
That is also something that we see is very unique because there's many countries that don't have a social security /NIC fee at all. But like at 31.42%, that makes it so high that it's actually making an impact on how you should design your programs. And that is something that we don't really see in any other country than Sweden. So how do you think about this part and what sort of impact does that have on the high level elements of how you think?
Yeah, it's true. Unfortunately, Sweden have a very high security cost, and it's not limited. Certain countries also have a limit. When you reach a certain salary level, you don't pay anymore social security cost. That's not the case in Sweden. So having social security costs as part of the cost analysis is very, very, very important to get an understanding how the cost would vary with different performance outcomes, different performance in relation to the share price development. Because the social security costs emerge when the benefits are transferred in form of share awards to the participants. And one way of handling this is that we have seen in Sweden, as an advisor, we have introduced caps, meaning that if the share price doubles, triples, or maybe 4 or 5 times, there is a cap on the maximum outcome, meaning that there will be a proportional reduction of the number of share awards being transferred. The meaning that there will be a limit in the social security cost overall.
Do you ever see plans where the participants needs to cover the social security costs?
Not in Sweden, no.
No, okay. Oh, that's interesting. And I think this is one of the more interesting things and things that you at least need to take into consideration if you either come from abroad and have people here. Not that you should design it based on it, you should know about it at least. And also, of course, if you're a Swedish company, you need to have full overview of these things. So I think that gives us a bit of like a high level overview. I have one more question, like kind of on that overview. How do you see like broad-based plans versus more management-focused plans? Is it any kind of more of this or this here, or your feeling on that?
Yeah, I would say if you go back 10, 15, even 20 years, several companies tend to strive to have a broad plan, and that was also the case, driven by junior representatives in the board and so on. But I think several companies have concluded that the interest among several categories of participants is not that very high. So if you go to group management, you would probably see a 90 to 100% participation. If you move down one category of participant, you would probably see at least 60, maybe 90% participation. While if you go to all employees, I guess you can assume maybe a 20% participation. And that has led that it's a lot of cost for setting up a structure and marketing a broad plan for all employees. So the tendency has been during the last 10 years that you keep it to a smaller group of participants. Maybe 2, 3, or maximum 5% of the employees. But in some cases, like the construction companies, they still have that broader plan structures. But otherwise, it's not. I wouldn't say it's not the Swiss plan are a little bit broader than you see in Finland and Denmark.
Yeah.
Especially, meaning that they not going only for the group management. They tend to go, I would say, an average plan would target about 30 to maybe 80 participants.
Yeah.
We also see some companies targeting maybe 200 or 300.
Yeah.
But it's quite seldom.
Yeah. Oh, that's interesting. We see that there's kind of movements globally, like there's something called Ownership Works, where you have kind of a lot of big PEs focusing on wanting to kind of get broader and broader plans. I think in Norway, it's always been like a culture of doing quite a broad setup, and it's quite big differences just within smaller regions here up north on how we look at these things. So yeah. Good. I have one topic that we thought we'd also cover related to a bit more of the development of the programs historically. You mentioned a bit back in time when it was introduced or so. So here more on like, is it any changes, more performance plans, more option plans? How is ESG coming into this? Any reflections of what's the trends the last 5 years, and how do you see it like the next 5 years ahead if you were to kind of look into the glass ball?
Yeah. When it comes to the trends, if you get the helicopter view on the trends, there's have not been that many changes in the last 5 years.
No.
The big change came after millennium shift when there was British share plans with performance criteria was introduced, especially among the large cap companies.
Yeah.
While meaning that within the large cap segments in Sweden, around 60% of the companies have share plans, either with the investment requirement or without.
Yeah.
I would say it's a 50-50 split among them.
Yeah.
And what has been in the market is a discussion around tailor-made securities, meaning warrants, call option convertibles.
Yeah.
Convertibles are not common at all, I would say. But anyhow, due to the fact that it is perceived by the participant as a high-risk financial instrument, which it is, and due to the volatility in the market, the cost crisis, I would say, due to inflation and high interest rate, participants are not that keen to invest in call option.
No.
So during the last 3 years, we have seen several companies transform, moving from option-based plan to share-based plans.
Yeah.
Both with investment requirement in the shares or without.
Yeah. And ESG, is that like a high level?
Yeah, ESG is a very hot topic, of course, both in Sweden and Norway, but also in other Nordic countries.
Yeah.
My feeling is that we are way ahead.
Yeah.
Almost other parts of the world, maybe Switzerland and a few other countries are on par with us.
Yeah.
But ESG has been on the agenda for at least 5 years. And the companies have been, I wouldn't say struggle, but they have been seeking relevant ESG targets to measure and make sure that they are also measurable over time.
Yeah.
And when they have found such a ESG target, they have introduced it in long-term incentive plans to the extent to about 15 to 20% of the potential outcome is linked to ESG targets.
Yeah.
And from the beginning, from the shareholders' perspective, it was appreciated and seen as a positive feature in the plan.
Yeah.
While during the last 2 years, I would say it has become a must to have that kind of element in the plan structure.
What do you think is like the most challenging parts with it? Is it like how to measure it, or is it to find the right things, or how to weigh it up? Let's say you have revenue and EBITDA as the other goals, and then you put in some ESG that may actually fight each other. So just like, what are the challenges with this?
I think that, to be honest, it has not really been a big discussion around that introducing ESG target would working against creating shareholder value.
Yeah.
I think for most companies, they are trying to adapt a more sustainable business model.
Yeah.
And this can actually help for poking a focus on relevant ESG targets.
Yeah.
And helping that transformation to become a more sustainable company.
Yeah.
So I don't see it's a contradiction. And the impact from the ESG targets are still quite low.
Yeah.
15 to 20%. So the most focus has been to find relevant targets that are measurable.
Yeah.
And that not change that much over time.
Yeah, because you typically have a 3-year plus period.
So if you have a 3-year measurement period, it should be measurable.
Yeah.
And what happens if you acquire a company that has not been that focused on sustainability? How do you adjust for that?
Yeah,
to make it a fair assessment of performance.
Yeah,
fulfillment at the end.
Yeah, no, definitely. We'll also record another episode where we deep dive into ESG, so we'll kind of get a lot more setups there. There was one more thing that you mentioned that I wanted to double click a bit on, and that's you kind of mentioned the warrants a bit.
Yeah,
and I think like just to be sure that we manage to cover that at least on a high level part here as well, because obviously from our point of view, when we work with Swedish companies, the warrants or the tegningsoptioner, it's everywhere, at least in specific sizes of companies. So I think that's something that both Swedish companies, they should perhaps already know it, but it's also relevant for companies from other jurisdictions that have and may have Swedish employees. So what is a warrant and how does it work and how should you consider it? Just on warrants.
Yes. Yeah. Warrant is a financial instrument that is issued by the company. It's a right to subscribe for a new share in the future at a certain price, in a certain exercise window or windows. I guess that Sweden, in general terms, are quite interested in the stock market. So, from time to time, people have been interested to take even further risks than investment in shares. And as you know, warrants is a derivative that creates a higher leverage, meaning that you can get a high return if the share price development is very, very strong.
Yeah.
But it means also that from time to time, there's a high volatility in the market, there's a downturn in the stock market.
Yeah.
We have seen it in the year 2001 to 2004. Tough times in the financial crisis, 2008, 9, 10. And also during the last 3-4 years, we saw a downturn due to the war in Ukraine and other situations, meaning that there have been increased interest to still use warrants as an instrument, but reducing the risk in some way.
Yeah.
And one way of doing that is to introduce caps in order to reduce the price of the warrants.
Yeah.
Or to introduce some kind of cash bonus or subsidies being paid during the term of the plan.
Yeah.
To get some mitigating element to the plan structure.
Because I think from like a European / global point of view, what makes it very different, at least here in Sweden, is that you actually pay for this warrant at time zero, because it's like normal employee stock option programs in other countries. You have a strike price, you have a vesting period, you have an expiry date, and you kind of get that free of charge. And then it's dependent on the development of the share price, whether you want to buy that share for the exercise price or not. But here is like you also do this valuation at time zero, and then you get the fair market value, and then the participants can select to buy it for that price. So you have some money you've already paid, and then after that point of time, it's just the same as a normal option. I think that part there is a bit like, why are you doing it? And do you see any challenges with that structure when you work with people from abroad?
Yeah, absolutely. And I see several challenges. The reason for doing this fair market value valuation at launch is that you need to define it as, from a tax perspective, as a private investment in a security or a financial instrument, and that should be on market terms. If it's not on market terms, it can be seen as a taxable benefit to invest in such an instrument. And from the perspective of non-Swedish participants, it's seen as a quite odd offering. People tend to be used to having things for free in form of restricted shares or stock options or performance options and so on. But that is fully understandable, because if you would offer a warrant or a call option to a Norwegian employee, you would need to pay a full fair market value, but still having a full margin income tax on the profit you make. And that means that that type of plans could be well perceived in the Swedish market, while the interest is normally quite low outside Sweden.
We've seen some examples actually of participants from other jurisdictions getting these programs, and then they buy the stock option, you can say it like that, for the fair market value, and they would buy that, think that they are also investors, that they should get capital gains tax and the company shouldn't get Social Security, but then suddenly it doesn't turn out that way, and you've both an instrument and you pay full income tax. I think that part is, at least the way we see it, it's very important to kind of be aware of these things here, because it will make your incentive plan into a disaster.
Agreed. I have a few examples where we have actually established a mix of the both worlds, where we have set up a joint, broader share plan, maybe with investment in shares. While for the top management, we introduce also a possibility for each 10 or each share that is allocated to the plan, they can invest in a certain amount of options on top of that. So you can, if the group management is mainly Swedish residents and taxed in Sweden, they may benefit from the both, actually. So they get a leverage from call options or warrants, while having a more secure performance-based plan, like the other participants.
That's I think that part there is one of the most important things to kind of really, even if you're on the Swedish side or in the international side, if you deal with people inside Sweden from a multi or from outside Sweden from a Swedish point of view, to kind of at least make sure you have the know-how you need before you jump into it. The topics on warrants have segued us a bit into my next question, and we've covered a few of them already, related to challenges for global companies. So now we've covered those parts related to warrants or tärningsoptioner. Are there any other kind of challenges and things you see? And then, I mean, you have a bit of the tax, we can come back to tax, but at a high level, and then also like shareholding or any other things. You also mentioned the 90% approval parts, which of course is relevant, but any other things that we need to keep in mind?
From a foreign share company, or
if we start off from, let's say you start off from your Swedish company, you've been growing, you're 100 people, you have started to hire people in 5 other jurisdictions. Are there any things you need to consider that you can't really just bring the Swedish stuff abroad?
We already mentioned around the warrants and the security based that normally would not fit any participant outside of Sweden. And then you need, in order to make sure that people are actually participating and when they understand the plan structure and the impacts on the taxes and risks. I think you should consider implementing a share plan for those participants. And either with an investment in the company shares in order to get the full participation in the share value from the start, or in order to facilitate the launch of the plan, you can also remove the investment required, which is more common outside of Sweden, I would say.
Among the companies that you typically advise, do you see that companies have a different, for the Swedish companies, do they have a different plan in Sweden versus what they have abroad? Do they do two, or do they stay with the Swedish one and use it outside of Sweden as well?
I would say it's a mix. Companies that have the bulk part of the participants in Sweden, and a limited group of participants outside Sweden, normally use a Swedish-based plan. But when you have a significant number of participants outside the Swedish market or the Swedish tax environment, you need to at least try to implement a certain plan for the non-Swedish participants. So I would say it's around a 50-50 split between companies that are trying to launch a Swedish plan for all the employees and companies that tend to have two types of plans being launched, one for the Swedish participant and one more adapted for the non. And the economics in the plan structures, it could be quite similar, even though there's different tax environments.
I see, And from the other kind of perspective, if you are a German or a UK company, you have kind of established product market fit, and you look at Sweden as a market you want to kind of enter, and then you start hiring here. Is it common then to kind of go in and then launch a warrant program here, or do you see that how do you help out in those cases?
I have a few examples where a Finnish company tend to launch a Finnish program in Sweden. It could work, but to some extent it could not. Well, especially when it's maybe a high growth company where you expect to be able to invest in warrants with a more limited taxation. But overall, I would say that if you launch an international plan based on shares and performance shares, that is quite well received in the Swedish market as well.
It is,
The Swedish share plans and performance plans has been in the market for more than 20 years now. So I wouldn't recommend a non-Swedish company to make a local option plan or warrants as a first priority.
No.
Introducing a share plan, using an efficient plan administration tool, that would most likely be sufficient.
One kind of thought on that is that like a challenge can be, let's say you are a Swedish, you live in Sweden, you're being used to working with a Swedish company, you've received warrants, tärningsoptioner, and you've been used to kind of buy, and things are kind of going well, and you exercise, and you only get like capital gains tax, and that's how it's working. And then you are being recruited into a multinational one that uses normal kind of what you call personaloptioner or employee stock options. And then suddenly you're out of the capital gains tax regime and into the income tax regime. Obviously 20% higher-ish, or from 30 to almost 50. Do you see that causes a fuss? Do you kind of get challenged on that this is a negative thing, or do you still say this is what you're offered and we don't really adapt?
I would say that it could be some discussion in the beginning. But I feel over time, when they understand the risk elements in such a share plan or option plan is less risky.
It is.
They are normally well received, I would say. So could be some discussion in the beginning, but overall, the share plans are the tendency. If you look in the market, is moving towards share plans, international plans.
And I think you cover one important aspect there that sometimes I feel tends to be forgotten, because you only think about, I want to get into the capital gains regime. But in the personaloption, in the tärningsoption, the warrants, there you let's say strike price is 10, share price is 10, and you have to buy it for 2-3, right? And that money you can lose. So the second you buy that kind of instrument, you can actually lose everything. So it's not like it's not the same. It's a different thing. You have risk in a warrant. You don't have that in a personal option until you exercise it.
No, usually.
Okay, good. Then we've covered both from Sweden and expanding out, and from out expanding into Sweden.
Yep.
During that, we've also talked a bit about tax and tax implications related to capital gains tax, to social security, and personal income tax. But are there any other tax either benefits or complications here? Discounts kind of reduced if you buy shares with the lockups. Are there any other caveats here we should keep in mind on the tax parts?
No, I would say if we compare to Norway, where the share saving plans, where the participants are allowed to purchase shares at discount from the company or via the company, those type of tax feature does not exist in Sweden.
No.
So most of the transactions are based on market terms. Yeah. Either you acquire shares in the market at market terms, but also with companies with limited liquidity in the market. Yeah. Also structure where there is a transfer from the company directly to the participants of shares, either by treasury shares or in a new share issue. Yeah. And they are all on market terms. Yeah. So it's no really smart tax setups in the Swedish market.
No. How about loans? Is that common? And then is that like taxed, or are there any ways that you can structure easier liquidity for employees?
According to Swedish company law, there's actually, you're not allowed to give employees loan or financing in order to buy the company shares. Yeah. So that is not part of the structures. One important issue that arise for some plans is that when the option expires, you normally need to fund the option exercise. Yeah. And in order to that, the company can't fund it for the participant, but you can seek some kind of cashless exercise solutions. So you involve a third party, which the company facilitate for the participants. Yeah. That has been quite common historically from the Swedish market. I, together with a law firm, advised listed companies where we introduced a setup where we embed an alternative exercise method where the options are exercised, warrants are exercised at the quota value with a reduced number of shares, or for call options where there is no exercise price at all. You have a net share settlement feature, meaning that it's no financing requirement at all in such a set. I would say we are mitigating the financial issues in the Swedish market. Still, of course, if you like to buy shares in the market, you need to fund it in some way, either by your private savings, or if you use your own. If you allow to use your own broker, you might have some kind of financing arrangement from that broker. Yeah. But not without any involvement from the company. Yeah.
Oh, I see. And also one question relates to, because you touched a bit upon like liquidity when you sell shares. I think we could do later podcasts on like the startup schemes in Sweden, but like if we think listed versus non-listed high level, is it any differentiations in terms of how it's structured and tax? Because if you're a company that it's not that easy to do a sell to cover cashless exercise if you're a private company, right? So are there any things here?
Yeah, the feature that are used in the warrants that are developed together with the law firm Sedequist, where the participant exercise a reduced number of shares. Or they just can exercise a reduced number of shares to the quota value instead of the exercise price. Can also be used in the private companies.
Okay, that's good.
Otherwise, the private companies, they have several different plan structure. The private equity community, they have set their models with shares and preferential shares and other elements. And if you look at smaller private companies, they tend to, if they don't have the possibility to use qualified stock options, they have a special tax regime, they tend to use warrants as an instrument.
Okay, no, I see. No, and as mentioned, I think the qualified startup option programs is definitely a separate topic. I think we could dive into, because that's I guess many kind of wants to know more about that as well. Next to tax, there's like regulatory requirements. We also touched a few on them, but you want to give us like, are there any more items outside the 90% approval that we need to think of, or have we covered it pretty much there, you think?
I think that this plan has been in the market for 25 years. If you look at the security base, so there are a substantial amount of knowledge and competence in the Swedish market among the legal advisors.
Yeah.
And so it's not a really big issue.
No.
You need to make sure that you have a well-structured terms and conditions or plan rules.
Yeah.
And it's very good to have to pay a little bit, make certain investment in the documents.
Yeah.
Because they can quite, to a very large extent, be used for several years.
Yeah.
And as Sweden is part of the EU, we are EU compliant when it comes to that kind of requirement.
Yeah.
So from my perspective, it's not really a big issue, the regulatory side.
No.
And the tax side is also quite scrutinized.
Yeah.
I think it's not big issue either.
Yeah. And do you see any kind of impacts of the shareholders' right directory with the remuneration reports and remuneration kind of policies or so? Do you feel that has have an impact in Sweden, or not yet?
No, I wouldn't say it. No, I think that with Sweden, as you had a very strong power from the institutional shareholders.
Yeah.
And in order to get the support, you have had for several years quite extensive documentation for the annual general meeting.
Yeah.
Describing the plan, the costs. So I think we're quite used to be open about the plan structures and the cost and the potential rewards. So it's not a big change, I would say.
I remember a bit back in time before the shareholders' right directory kind of came in place, we did some research into the Norwegian companies and the Swedish companies to try to get some data and structure it for a few clients. And I remember how much easier it always was to work with annual reports and the public information for the Swedish clients, because it was so much more standardized. I think on these things, many others as well, I guess, but you've always been a few years ahead of how things are being adapted and standardized more in Sweden than what we see in Norway. So yeah, I guess that. Good. I think we're getting closer to the end now, but with everything we now know, we know that like one of the biggest reasons of using equity incentives is to attract and to retain your key people. Are there any kind of, if you're trying to kind of give some reflections on how to best recruit and retain people with these instruments, what's your reflections on how you kind of help start off with a company that have that in mind?
First of all, I think it's one key ambition when you start designing is to keep it simple.
Yeah.
Easy to understand. Even though as you in the product team, you know the issues and the feature of the plan.
Yeah.
I think keeping it simple is a key word to keep in mind. And it should address the long-term ambitions of the company.
Yeah.
But they should not forget the current economic environment. I have seen a few plans being launched with far too ambitious target setting. So having a realistic target setting with maybe a minimum hurdle that could be reached with a 80% probability, but maybe a tough stretch target that is reached only by 20% probability.
Yeah.
Meaning that the participants joining the plan have a belief that this could actually be actual reward at the end. So that is quite important. And having diversified target setting is not wrong.
No.
It should be relevant participants, meaning that earnings per share, which has been quite a common criteria to use historically, is criteria that is quite well known by the CEO and CFO.
Yeah.
But if you move down a few a category or two, it's quite uncommon to have a good understanding of EPS.
Yeah.
It might be better to use other performance criteria that is used in internal reporting and is follow up on a day-to-day basis or more or less. Or a monthly basis at least.
Yeah.
So it gives a good incentive to strive. And of course, having some feedback back to the participants by using a plan tool for administration is quite important as well.
Yeah.
I still see a few plans in the Swedish market that is quite complicated, even though with experience from other plans, it's difficult to understand how it really works. So I think that there are still companies that had made it too complicated.
Yeah.
And I would say it's among those companies, it's normally the largest ones that tend to make it more complicated. And I think that there's room for improvement among the largest companies, some of the largest companies in Sweden to review and to make it more easy accessible.
Yeah, I think like I fully agree. I think if you don't understand what eventually can give a payout in a simple way, so you'll remember that for the 3-year period, you should rather just give short-term bonus in cash.
Yeah,
because it doesn't really motivate. It doesn't really drive you. It needs to kind of be so simple, and couldn't agree more. One final question related to kind of the attracting and retaining. How do you consider like doing a big bunch of grants or share purchased out in the market or out to your employee at time zero versus doing annual or ad hoc, or do you kind of prefer any of these kind of frequency?
Yeah, I from my perspective, I tend to always recommend launching an annual plan.
Yeah,
and meaning that if you have the AGM in April or May, tend to launch at the end of May, maybe beginning of June. But you also try to have a feature in the plan where you have a portion of the plan being available for new recruitment.
Yeah.
And keeping that window open until the third quarter interim report, maybe end of November. So you can use it as a recruitment tool.
Yeah.
And then after in December and to the next launch, it's a closed period, but you can always say that the ambition of the board is to propose a new plan for the coming AGM in April, May. So you have a setup with annual recurring plans with a half year of implementation window. And then thereby, if you have a 3-year plan, you have 3 plans working parallel where the company or the board can actually modify the target setting or change the group of participants somewhat, but also have a possibility to use this as an important element for in the compensation structure when recruiting new people.
Yeah, I think that kind of sums it up very good, Stefan. I think we covered on a lot of like topics, Sweden deep dive. We have a couple of follow-up topics that we want to cover later as well. So I think this sums it up good. So kind of leaves me with thanking you. Great to kind of have you here. You are you have so much super insight for us to tap into. So thanks.
Thank you, Christoffer.